All right, today we're going to talk about cash money, my friends. Cash money. What do you do with cash? When we consider different asset classes, most of them we think of as investments that we don't want to touch for some period of time, probably 3 to 5 years, so they'll have time to accumulate and you won't have to sell at a loss or sell at a gain and then take a taxable event that might be inconvenient. We think about it this way when we think about stocks, real estate. Depending on your view of crypto, you might have a 3 to 5 year or longer time horizon. And the idea is that the money that you're first using to pay bills, go on vacation, that type of thing, in the short term, you're going to use out of your cash. Now, depending on your age and your wealth, you may have a different size cash position. You have to determine before we even talk about what to do with cash, what should your asset allocation be? I have multiple videos about asset allocation. You should figure out how much cash do you need. I actually don't remember what I had in cash at the time I did the asset allocation video. I think I have more cash comparatively than some people recommend, like 8 to 10%. And I explained some of my reasons for doing so. Okay, so you figured out what that is. So it just sits in a checking account, right? Or like under your mattress? The answer is no, not necessarily. There are scenarios where you can put your cash to work. You can earn a better than zero or better than negative interest rate in cases where you're earning nothing and then you're losing on inflation. And you can take on no or almost no additional risk because you can find options that are FDIC insured up to $250,000 per account, which we will talk about. Right now, we are in what is becoming a higher interest rate environment. Now, that may be different by the time you watch this video, doesn't matter. But there are options for what to do with cash that are more appealing during a high interest rate environment. But we're going to basically talk about three options. We're going to talk about HYSA. This is a high yield savings account. We're going to talk about a CD, and we're going to talk about a money market account, an MMA. We're going to explain each of these. So let's start with the high yield savings account. First of all, what's the difference between a high yield savings account and a regular savings account? In many ways, they're the same, okay? The high yield savings account is FDIC insured up to $250,000, similar to your local checking account at your local bank or whatever the case may be. You sometimes have a withdrawal limit of something like 6 times per month, and you can transfer the money in and out pretty easily. The biggest difference is that the average savings account right now pays about 1/4% a year, and you can find high yield savings account that are somewhere in the range of 3.5 to 4% annual interest right now. That's a much higher rate. Now, the downside to these accounts that have the highest yields is that there's often no physical branch near you. So you can't just show up and say, I want cash today. So the strategy for many is you put the bulk of your cash in a high yield savings account. You keep an account at a local branch. When you need money, you transfer it in from your high yield savings account, and then you go and withdraw it at the local branch. You can also get a debit card from your local branch. And then when you transfer the money in, you just use the debit card as an example. But you need to plan for that. It's 2 to 3 business days typically for these bank transfers, sometimes a little faster at some of these banks. So that's the downside. It takes a couple days to get the money in most cases, although there are high yield savings accounts that have options for getting you money more quickly. Okay, next option is a CD. A CD is a certificate of deposit. These are FDIC insured. You can find them at most financial institutions. The big difference is if you want to avoid a penalty, you can't touch the money in the CD for the term of that CD. If you have a 1-year CD, you have to leave the money in there for a year, or you're going to get hit with a penalty. The penalty varies. The advantage is sometimes the CD rate is higher than the high yield savings account rate. And of course, the longer the terms can be 6 months up to several years. I've seen 3-month CDs, all sorts of different terms. The key attractive part of it is you might get a higher rate. Right now, you can find CDs paying 4 to 5% for some of the longer terms. The risk is you might think you don't need the money, and then you do. And in that case, you have to pay a penalty. Often for CDs of 6 months or less, the penalty is 3 months worth of interest. For longer terms, if you have like a 5-year CD, the penalty could be an entire year's worth of interest. So that's the risk with a CD. Then you've got your money market account. The money market account is essentially an interest-bearing savings account offered by many financial institutions. And it has some of the benefits of a savings account and some of the features of a checking account. So with some money market accounts, you can write checks, you might have debit card privileges, you still have FDIC insurance on the money. They typically pay a higher rate than regular savings accounts, but usually lower than the high yield. So like right now, I looked, there are some MMAs between 2.75% and 3%. This is changing very quickly. So not quite the same rate as with the high yield, certainly lower than with the CD, but you typically get some of the features of a checking account. So what makes sense? Depends on your situation. With all three of these options, we're assuming you want this portion of your portfolio to be in cash in the first place. You first have to figure out what that is. So you've got to look at your asset allocation and figure out, okay, I want 50%. Whoa, that is not 50%. You want roughly, well, something is strange with my drawing here. You might have 50% in stocks, and then you might have your slice of crypto and real estate. Whatever is your cash, right? You need to know what is that percentage. If it's 10%, you might say, well, I'll put half of it in a CD, and then I'll put half in a high yield savings account, for example. If you need the money in the relative short term, these are options to consider.